are you doing?
Hello, how are you?
Good. Nice to see you.
Nice to see you. I was waiting for you to get all the electronic business set up.
It is set up.
Okay. I'm going to do the share screen business. Hang on a minute.
Did I click the right link? Is there a separate link for presenters versus just?
Nope.
Okay.
Nope.
Cool.
It's the code you have actually that
Okay.
lets you come in as a co-host or as a presenter. And then I just have to, and who can share? All panelists who can start sharing when someone else is sharing. Okay.
Look at me, I'm a little guy down here, hello.
Oh my God, that's great. I've been on 500 Zooms and I've never had that happen. All right, so you can share your screen now, I believe.
That's what I just did, yep.
Okay, I like the little thing in the corner, that's great.
Yeah.
Q&A and chat. Okay, I think we're really good. You want to talk a little bit? Is it just going to be you today?
I don't know. Let me check with Ayla. She just tells me to tell me to go places and I go there. That's how it works. One second. All right, we're good. How are you? Where are you?
I am in Chappaqua, New York. It's about an hour north of New York City.
I'm sorry, what was the name of that?
Chappaqua.
Chappaqua. Okay, that is clearly a Native American name because I spelled it Chaper, QWA. I don't think that's really right though.
CHAPPAQUA.
Chappaqua. How fascinating. Okay, see, this is a new part of the town, New York, that I've never actually experienced. So
it's Commuterville. I mean, it's really nice. You know, we have Little League, and it's all very, very very green.
Okay.
Hills
it's hard
and
to see out the window, but
yeah. And then let's see. We can go out that way.
Oh,
it's very green and it's beautiful and all that good stuff. And then you get on the train and 45 minutes later, you're at Grand Central in New York City.
Nice. Okay. That doesn't sound too dissimilar from where I am. I'm on 5 acres in a place called Barrington Hills outside of Chicago, but 45 minutes, I'm downtown Chicago. So
I grew up in Kalamazoo, Michigan, right across the lake.
Okay. Nice. My parents are down in Elkhart, Indiana.
I know Elkhart.
A lot of people have their New Buffalo summer homes or lake homes or whatever we call it. Right?
They have them on Gun Lake, right above Kalamazoo, which is where we grew up in the summer.
Okay. Fair enough. Did you go to University of Michigan?
I went to Kalamazoo College.
Okay.
Which is one of the oldest colleges in the United States.
Okay.
And the first school to let women in chemistry in 1913.
Oh, did you go for chemistry or was that just a nice little bit?
I started out pre-med and then I thought, well, this kind of stinks. So I changed my major. Hey there.
Hello,
Hi. Just had to do a little restart of the computer.
Nice.
I think we're all in the clear.
Oh, do I need to match a virtual background here? Oh, wait, I don't have it. Ooh, I don't have a. Do I have one? Ah, it's fine. We'll use this.
Well, both of you are obviously more tech savvy than I am.
Well, Wendy, we do this. We host an event every Wednesday at 10 a.m. for a year and a half. A virtual one like this where we do presentations and things like that. So for better or worse, my office looks like a home studio.
I love it. I love it. Well, that's good. So how long are we going? How long's your deck?
We don't have timings on that. I think last time I probably took about 7-8 minutes, the deck, and then we did Q&A afterwards.
Yeah, okay. Max might be tiny bit shorter even.
Yeah.
So it goes to like 2:45, 3 o'clock-ish, depending on the amount of questions.
So we start at 15 past, is that right?
Yep, 15 past.
Okay. So then, yeah, depending, we were thinking about a half hour Q&A, and we've cleared a block off afterwards. If people want to keep asking questions, we're happy to do so. I don't know if that works on your end or you need to shut it down or whatever the case may be at some point.
He has me shut it as a hard stop at 3:15. If it got really jolly and kept going and going and going, he has me at a hard stop at 3:15. But you know, if they stop if they stop participating,
Yeah,
we'll just wrap it up naturally because it goes to YouTube and we don't want to trail off at the end going questions, you know.
We can also pretend there's a hard stop. Sometimes leaving on wanting more works, doing like a hard stop at 45. If you wanted, and we can shoot for that or mention it. And if we go a little over, we'll go over and maybe out to us one-on-one, which is kind of the whole point anyways, right?
Yeah, one I did for Arthur, I think 2 weeks ago, somebody was typing in the chat, giving their number saying, I want in on this, call me. So, you know, hopefully we'll be successful like that again.
We'll see.
How often do you do these again?
Whenever Arthur asked me, I didn't do them for the last week because I was at 2 conferences I was speaking at.
Were you at Opal?
I was at Opal. I had the best panel.
Really?
What time is it? 2:07. So I told Abe Wellington that I would only do it if I could bring some of my own panelists.
Okay.
You know what it is? I didn't want some like 5th and 7th gen families going, yo, we invest in AI because they asked me to run the AI panel. So he said, yeah, you can bring 2 people. So I brought Nolan Bushnell, right, who founded Atari Gaming. I love to game.
Funny.
And he founded Chuck E. Cheese's. And then I got
really? I didn't realize that was the same people. That totally makes sense, but
Yeah.
I never put 2 and 2 together.
You want to just literally like wet your pants. You should hear him talk about the venture raise for Chuck E. Cheese's. I'm selling it that there's going to be games and really bad tasting pizza and with a big rat. They'll love it. Would you like to write a check?
Oh, that's beautiful.
I will say that rat is one of the creepiest things I've ever experienced in my life. Even going back now, because we still have birthday parties sometimes there. It's just like, oh, how was that?
Do you know why the pizza tastes bad? Because kids don't like spices. They don't like spicy things. So they deliberately made pizza without spices to appeal to the like 2 to 10 crowd. And parents hate it.
I mean, it makes sense.
It does when he explains it. But yeah, I had to do with my twins are 13. We had to go so many years and I was like dreading it. The kids love it. And Rare Cheese joined us, who is the CG director. He did Cronus for Iron Man, Mission Impossible, all the AI there, and he's now in gaming. And I had this great guy, Mark Jackson, who's a theoretical quantum physicist who really does do string theory. 2 of his bosses were on the Big Bang Theory as themselves. And he said their quantum group is merging with Honeywell, and there's going to be an IPO. And he's just brilliant. And my friend Josh, who runs a family office, but is very, very smart and used to work in the cloud and everything. It was the best panel. We were just
that's great.
having so much fun. And I did the week before, so I went back to back, was family office experiences, which is mostly athletes, that kind of thing. So it was fun. That's why I wasn't doing Arthur's panels, but every once in a while with fun people, he goes, Wendy, do the panel.
Do the panel, get people talking. Yeah. Okay.
Yeah, it's fun.
Was it a virtual panel or was it in person?
No, I'm done with the virtual stuff.
Yeah.
I did it all through the pandemic. So if they want me to speak, there needs to be people. Hosting's one thing, but I think, it's nice because you can reach a broader geography. But I think people are ready to kind of go back to conferences. I've been to 3. So
okay, which ones have you gone to? You said 2 last week, Opal and
FOE, and then I did Jaboy in May, which was the end of May. So I just gotten my shots. Mexico.
I've heard. I went to Jaboy's, both of their Florida ones in July. Interestingly enough, But I heard the Mexico one was way better.
Oh, it was awesome. And I cannot wait for Rome. I'm already signed up. So he's
that's the
gonna
Medina family, right? Or the Medina family?
well, it's Neil Green who runs Javoy. And then I don't Medici, Lorenzo, you're talking about?
There we go. Yep, thank you. Yep, did that wrong.
Yeah. So you can be a sir if you want to.
Oh, do I? Do I really?
It's like, I don't know, something like $7,500, and he has a legal right to make somebody a dame or a sir, and you get the sword. And if you need that in your wheelhouse,
I mean, I might at some
Lorenzo
point.
does that.
I mean, I suppose you can become a lard in Scotland for probably less effort, right? Just by like, I think you can buy like a square foot of land and you technically become a lard or something like that.
Actually, because this is De Medici and he has the authority to do it by law, you actually get your name on the roster for life. Ooh. And it lets you into some clubs in London, as opposed to the one in Chiland in Scotland that they sell on the internet.
Right.
Fun things I know because I work in the family office space.
Oh yeah, right. No kidding. These are the important things, right?
Everybody's dying to be a knight of sort.
Yes, you can be a knight or a dame or whatever floats your boat. So it's fun. And what do we got? We got 3 minutes. Do you want me to just say Diffuse Digital and let you guys introduce yourselves?
We're putting together the team slide as we speak. So we are going to start there. And that would be a good way to go about it.
Okay.
Yeah, I might just quickly replace the images with round images just because we have a round theme going on. So,
okay. Yeah.
Because that's obviously mission critical.
Totally.
Sorry.
All right. Let me know when it's good to download and we shall go from there.
Okay.
So Arthur said there's going to be about 49 people had registered for it. I don't know how many will come on, but I do know he gives you the list of all the people that registered, so you can email them out afterwards. I'll let them in, and as they're coming in, because it takes a couple minutes for them to all drop in, which you know because you do this all the time, I'll just say, hi, you're not going to be able to speak out loud, but please use the chat or the Q&A. And I'll mute myself while you're doing your deck, and then I'll pass out the questions.
All right.
Beautiful. Thank you.
Thank you very much.
What do we got here? 2 minutes. Time for another little sip of Coke and a 5-hour energy because I'm 56 with twins who are 13.
Oh, wow.
Lots of energy.
Boys or girls or fraternal?
I have 2 boys and one is transgendering to a girl.
Oh, okay.
Wow. Awesome.
So I started with 2 boys, and now I'll have a boy and a girl.
Well, good on you for being supportive, because I know that probably wasn't an easy thing for anybody involved.
They're my kids. I don't care if they're purple, as long as they're happy.
That is exactly the way to go.
Well, they're beautiful. We adopted them at 9 days old, and they made me a mom. And so I take that duty seriously.
Oh, wow. Did you adopt them from the US or were they?
Yes. Yep. You can do a private adoption in the US pretty quick, about 4 to 6 months.
Yeah, it's the same thing in Canada. We looked into it. Apparently, because they're making it very difficult now to adopt anybody under the age of 1 from foreign countries. Like Africa is now 2 years minimum age and etc. So you can't adopt a baby anymore.
Oh, it's so easy in the US. If you ever want to go over it, just you guys, I gotta let them in a second, but you have my email. Just email me. It's not difficult.
The same is true for Canada. So I live in Canada. The same is true for Canada. It's super easy. It's a 6 to 8 months adoption process. It's entirely free. They actually are not allowed to charge a single dime for any of the administration. Nothing. It's crazy.
Yeah, we just had to pay the state of Texas fee. Oh, here we go. Now, is everybody ready?
Yes.
Okay. I'm going to start. Hello, welcome everybody. This is Wendy Kraft. I'm going to go over a few housekeeping rules while everybody populates the room. Today we have Diffuse Digital, and we have 2 lovely folks who are going to talk about the company and about what they see. So I'm going to let you all start dropping in. Okay, I'm going to let you guys take it away.
All right. Thank you very much, Wendy. Greetings to everybody out there. Thanks for joining us this probably afternoon, depending on where exactly you are. I'm going to make myself a little mini version of me. Here you go. So that we can talk through this together. Enjoy the mini me over here. So yes, we're Diffuse Digital, like Wendy said. We're going to be talking about Diffuse Digital 30 specifically today. It's a new fund that we just launched. Our tagline there is first private institutional digital asset index fund. That's a bunch of words, but it'll be very clear in just a minute. Briefly, as a legal notice, we'll skip over for that for now. The team, who are we? My name is Kenny Estes. My background is actually high frequency trading. I did the stereotypical 18-year-old, started at a 15-person startup, and 10 years later left a 1,500-person public company. And along the way, I started spinning up a bunch of boutique investment vehicles. So real estate, venture capital, digital assets, capital markets. I think we started about 9 or 10 different funds across different verticals. So what Diffuse does now is an extension of that, where we go out and we find interesting market opportunities, interesting investment strategies, and we create a fund vehicle around them and give that investment opportunity up to people who are looking for orthogonal, non-correlated return risk profiles. So that's me. Ayla, do you maybe briefly want to talk about you and your background?
Yeah, I'm happy to. So I spent the last decade plus in all things commercializing technology, everything from working hands-on with startups to innovation labs and then raising capital for companies. Kenny and I met about a year and a half ago, and when we started Diffuse, it's taken on many shapes and forms. But from that moment onwards, when we started launching both our third-party funds, but also our proprietary funds, we really saw the momentum pick up. So really excited to share some of those bits with you here today of what's come out of our journey and how you could potentially participate.
Yeah. And one area, and we'll start right into it because we know we have a hard stop at 45 minutes past the hour, depending on what time you're in. The first one, the fund that we've launched June 1 is called Diffuse Digital 30. The Diffuse Digital, that's just a moniker we use to describe all of our digital asset products. Honestly, that's a lot of our focus right now because there's just so much opportunity in digital assets, kind of across the board. So briefly, what's happened in the past, rewind 2 years ago. If you're talking about digital assets or cryptocurrency, you're probably talking about Bitcoin and Ethereum. That's not the case anymore. Last summer, we saw the rise of decentralized finance, where you take tasks that is traditionally done by banks and do them in a decentralized way and avoid all of the headache and the expense of golden parachutes and bureaucracy and things along those lines. So you've seen this massive rise of things that look like revenue generating solutions where there's just no company in the middle of it. So it's a fascinating new space, but this created massive throughput issues. This created a lot of kind of just growing pains. And you saw all of these Ethereum competitors come to the market. You probably heard some of the names: Polkadot, Solana, Cardano, Polygon, Binance Smart Chain. All of these are really trying to address some of the core problems that Ethereum has to facilitate and help input throughput. Long story short, Bitcoin and Ethereum are not the name of the game anymore. You're seeing all of these alternatives coins coming on strong. Bitcoin is actually now referred to as the boomer coin because people look at it as gold, but you see all of the interesting innovation isn't happening there anymore. So this chart on the right, that is the top 30 market share breakdown. So you can see Bitcoin has just fallen off a cliff since the beginning of the year. Ethereum's kind of flatline, and the other 330 are coming on strong, and we fully expect that to continue. The issue is the fund sponsors, the people actually creating these products, the grayscales of the world, they're still very focused on Bitcoin and Ethereum. GBTC, last I checked, had 25 billion under management, and that is one product. It's just Bitcoin, and it's not even a particularly efficient vehicle. So it's roughly comparable to paying somebody 2% per year to hold Microsoft in your account. rather than going out and buying the S&P 500. So what we, so that DIY diversification just doesn't really exist. So that's where we come in. Think of us as the S&P 500 for digital assets, but we're doing the top 30. All of those have north of $1 billion in market cap. And we're doing it and creating the vehicle to allow for institutional, more sophisticated allocators to actually put money in. And we'll talk a little bit more about what that entails, but that's a very key aspect. It's you want exposure to digital assets. You want one-stop shop. You want solid infrastructure, you know, tier 1, tier 2 service providers. We're your best bet. So where we start, it's a beta product, cap in beta. This is an index fund. So here it's straight 2% management fee. If we lend out any underlying assets, we use the same model that BlackRock does, which is, you know, 80% of any interest revenue goes to the fund, 20% goes to the advisor. Same thing that, you know, the SPY does. So it's very flat. We don't gain anything on appreciation. There's no performance fee, nothing along those lines. This is a true index product to allow for your exposure, and it's rebalanced monthly and it's redeemable monthly. So this is liquid. You can get out. There's not going to have these discounts and premiums that if you follow the grayscales of the world, their share price is pretty far away from the actual book value. So we don't have some of those artifacts. The product is designed, we spent many hours finding tier 1, tier 2 Wall Street providers. So we're talking tax, audit, fund formation. Everybody we use is respected by Wall Street. So larger allocators can just look at it and say like, okay, yeah, we know them. We're comfortable with them. We're not going to use mom and pop shops that are kind of learning on the fly. And then lastly, we, you know, very carefully thought through how we're actually going to facilitate the trading. We only use qualified custodians. We have strong fiscal controls, governance. We make sure that we're fully compliant with the regulations. People that are in the space probably have seen a lot of headlines in the last week about BlockFi or Tether, who the regulators are coming down hard because they just decided that they were going to do it in a non-compliant manner. And now it's kind of coming back and biting them. We decided we wanted to do it the right way from day one, again, with the focus on allowing institutions to allocate. So we just launched this June 1st. The first phase is the first 10 million in raise. And that's where we are right now. This gets us a little bit of scale and takes the fund to break even roughly. So the key thing about the first phase where we are is everybody who invests gets a profit share in the fund for the lifetime of the fund. And we'll talk about that in a second, but that in and of itself, if we get anything like the AUM we think we can with this product, is going to be worth quite a lot more than the actual original investment amount. Once we get to about 10 million or so, we'll go to phase 2. We have a very strong network of broker dealers ready to distribute this product, but we need to get to break even before we can pay them their success fees. So phase 2, start paying success fees, onboard all of our broker dealers, including one which is a joint venture. We own about a quarter of it. They're onboarding about 40 registered reps as we speak. So we think that phase 2 distribution will go very well. Phase 3, when we get there, has everything to do with the market. There we can turn it into an ETF if the SEC's figured out some regulatory things. We can list it in Canada. We can drop a feeder in the Caymans. We can turn it into institutional only vehicle. It's really, we're going to have to make that as a game day decision. But when we get a bit of scale and we can actually afford any whatever expenses to go in whatever direction we want. Investment committee right now, well, it's going to be 5 people. Right now it's me on the fund management side. We have 2 very experienced traditional finance technologists that I actually have known for about a couple decades from high frequency trading. And then we have a short list of other people that we will onboard who bring a lot of credibility to the product or the project, but it will be ready for phase 2 more than anything. Investment terms, $250K minimum, 2% per annum management fee. Like I said, it's an index fund, that 20% lending revenue. So if same way you get prime lending interest as BlackRock managing ETFs, we do the exact same thing. So it's just 80% goes back to the fund, 20% goes to us. The advisor covers all formation expenses. It covers all OpEx. So when you put money into this entity, it's going to be invested in the index. It is not going to be spent. There's no lockup. It's a monthly redemption, and we launched it on June 1st. And then I mentioned the profit share for phase one, and we're using what we're calling a jump ball, where we are in our fundraise towards that 10 million determines how much of a profit share LPs get. So in total, the first million tier, which is pretty full at this point, they receive 2.25% profit share for the lifetime of the fund. The second million gets a little bit less. The third million gets a little bit less than that. The idea is to give people an incentive to come in early, which is obviously the hardest money to raise, so we can get to scale and really do that broker dealer push sooner rather than later. Now, one key thing is that profit share vests over 18 months. So if somebody's super cynical or Machiavellian, they could come in, invest, let the money sit there for a year and a half, pull out in full, and they can keep the profit share as effectively an annuity for the lifetime of the fund. So the cost basis for that profit share is 1.5 years worth of management fees, which is pretty negligible at the end of the day. And that is the product in short. So Diffuse Digital 30 is the first institutional grade digital asset index fund that launched about 2 months ago, and we're scaling rapidly. So I suppose, Ayla, is there anything else you're supposed to touch on there, or right to the Q&A?
Yeah, I think we got it. Let's hop to the Q&A.
All right.
Hi, everybody. If you could post your questions in chat or the Q&A, that would be fantastic. And if not, then I'm going to take moderator, hosting, priority, and share and ask questions myself.
Oh no, please save us from Wendy. She's gonna destroy us, guys. And gals.
So I guess you guys have to ask some questions, because if not, then I'm going to do that. No, okay, my turn, haha. So it takes the top 30 digital assets?
Exactly right. We use almost the same methodology that the S&P 500 does. The only difference is we rebalance more frequently. S&P 500 rebalances quarterly. We do it monthly because, well, frankly, digital assets move faster. And constituents come in and out a lot quicker. So we kind of had to. But it is market cap weighted, same methodology. We just strike a NAV at the last day of the month. And then there's the new constituent list. We trade into that position and then we hold it. So it is, for those of you who have picked up an MBA at some point in your life, this is very much like CAPM 101 on, people have won Nobel Prizes about why this is the best way to invest for the long term.
So from a fund structure, can you just kind of go, there's been a lot of buzz in the family office space about digital assets. Mm-hmm. Can you explain, because it was sort of on the slide deck, can you explain why it's better to invest in digital assets through a fund than individually for folks?
Well, to start, it's easier. So you don't have to manually go out and do the pieces. So you get better economies of scale, right? As a general rule for the trading that we do. And another big one, and this is a key one for institutions, is custody, right? If you're going to be doing it yourself, you have some money sitting in an account, that's great. We have actual proper and appropriate fiscal controls, qualified custodians throughout. We really carefully thought through to make sure that investor capital was safe. And then having, very good technologists to do the execution of it. You're gonna get better execution, less slippage. We're gonna have more scale for lending. We're not doing it right now, but we do plan to do so right now, which actually will probably overcome most, if not all, of our fee drag to track against that index. And then, oh, sorry, go ahead.
We just had a question from the audience. I guess you don't want me to be asking all the questions. They'd like to know which exchanges will you be using for this?
Yeah, absolutely. Right now, it's just Coinbase. We launched there. So there's two pieces to this. One is custody and one is where we do the trading. Coinbase has a pretty decent coverage on the trading side, Mish on the custody side. So our game is to try to find custodians to give us the maximum SIMBR coverage we possibly can. Last I looked, I think we have 21 of the 30 constituents, which is still like 90% of the market cap. So it's pretty good tracking. And then as we go to new custodians, as we want to add more tokens, and if Coinbase doesn't support it in an effective way, then we'll go to where the liquidity is.
So I wanted to ask, is there any issue? I know there's a lot of regulatory action. I get sent something, I think, at least once a week. How's that going to affect? How's that going to be responded to? If you can talk about that a little bit.
Ayla, look like you want to take that one.
Yeah, well, I guess it comes on two levels. One of them is the actual structure of the fund, the overall fund itself. In that structure is actually fairly straightforward. It's Reg D fund, which are kind of industry standard, and that shouldn't be at risk itself. We haven't tried anything fancy or advanced there. If we wanted to go for an ETF, that would obviously be completely dependent on the regulatory environment. But the second layer is the individual tokens, the constituents that we actually are covering. So, for example, if any of them come under scrutiny of the SEC, they would then drop off our actual radar as well. So we wouldn't have them as part of the constituent list anymore. And we do reserve the right to remove some of the coins, like a Dogecoin, for example, that we might not want to have on the list for a variety of different security, safety, and other reasons. So I would say in terms of regulations, it would be more on who's going to be part of the constituent list versus are we going to be able to run this fund or not.
Totally. And the key thing is, we really did it compliant from day one. We're not trying to skirt. We're not going to try to slide by or get away with anything. It's like, no, we're going to be upfront. Here's exactly what we're doing, how we're doing it. Have we get the good lawyers on to make sure that we get it covered.
Fantastic. So we have a couple of more questions. One of the audience members is asking, do you also trade short term? Example, hold a position for less than a month?
We don't at all. We did, when we went into it, we looked at, okay, the expense of doing the trading, the slippage that entails, found that a month was about the sweet spot. Doing it more frequently that we didn't really help our coverage to the index. And again, the idea is to track the index here. It's not absolute returns. And then the other thing is that it creates more tax by doing more active management. And this is very much by design. It's a passive fund. So we want to focus on that.
The audience member said, thank you for that explanation. We have another question, which you can see the right. I believe it's pronounced, don't laugh at me, Binance offers much better liquidity versus Coinbase. Why are you sticking with Coinbase?
It's a valid question. And it's definitely true for the less liquid stuff. We will optimize for that. Right now, we're not. That is execution slippage we're talking about with the amount of liquidity differential between Binance and Coinbase is at the magnitude we are, about 1 million. It's pretty negligible. Now, as we grow, as we scale, and that becomes a more significant in terms of absolute dollars, we will definitely onboard them. We are, and we can't emphasize this enough, the reason for that phase one, we're doing the profit share is like, we are out ahead of the puck, right? We don't have full coverage on qualified custodians because straight up, no qualified custodians offer a lot of these. We don't have the absolute ideal execution across 20 different exchanges because at that scale it doesn't make sense and it doesn't make any difference on the people's return or to the tracking. So that's where we are, and that will definitely improve and get more sophisticated as we go.
So I have a question. So you're investing in the top 30 digital assets. How are you going to weight that investment? Even across all 30, weighted more heavily towards, say, Bitcoin? How's that going to look?
Yep, it's straight market cap. So the number of outstanding tokens or coins, whatever we want to call them, times the current price, and that way you get a market cap. Easy peasy. So right now, and actually I haven't looked, Binance and Bitcoin and Ethereum combined, I think we're 68% of the index. Last I looked, that's obviously in that first slide on that first page. That's going down and down and down all the time. And this presents a kind of organic way to shift your exposure as that trend continues. The other thing, and this is Gudrun, sorry, I'm probably not pronouncing that right. Gudrun. The other piece is all of these are super liquid, right? The top 30, all of them have north of $1 billion in market cap. So the relative difference of liquidity between Binance and Coinbase isn't really going to cause much of a difference. If we were going to like 200, that might be a little bit of a different story.
So Gudrun, I hope that answers your question. If anybody else has any, I've got these wonderful folks for about another 15, 20 minutes. Feel free to ask. So it's going to be straight market cap no matter what happens to the market, or is there any situation that would cause you to say, whoa, you need to get away from X, something bad is happening?
It's a good debate. The trade-off, and actually Tim just asked a question, which is the different sides of the same coin. How formulaic and how discretionary, right? That's the big question. Right now, we're entirely formulaic, right? So if we can get custody for it, if we can trade it, we will do it if it is in the top 30 market cap, full stop. Now, that could change. A good example would be Ripple. Right now, it's in the index. If the SEC comes out and says that it is illegal to own this asset, okay, we're going to put some discretion in there and we're going to take it out. If that's the clearest and easiest to make sure we're in compliance. Outside of that, we're pretty much all formulaic. We actually had quite a lot of back and forth with like Dogecoin, like Ayla mentioned, which is arguably artificially inflated prices. I don't know what that actually means, and that's kind of the whole point of the index fund, because it's got the exact same code base as Bitcoin. So whether one has more inherent value or the other is difficult. So we did end up going with formulaic on that one, but we do have some discretionary. We will just use it very loosely.
So Gudrun's asking, have you back tested the strategy and thereby have an indication of what return investors could expect?
Yeah, let me pull this up. So the first thing is, this is not a returns focused fund. This is a index tracking fund. So there's a distinction there, like this isn't going to be an IRR product, or we're going to be actively deploying and making returns. Now, having put that caveat in there, let me give everybody an epileptic fit while I go through here. So here is the 2020 historical analysis. This is through June 13th, probably a little bit out to date. There's Bitcoin, there's Ethereum, there's the DD30. Again, that you really started in earnest that 2021 where the coins 3 through 30 started overtaking. And that black line all the way at the bottom there is the S&P 500. So it is kind of off the charts on a historical basis. Whether or not that continues is a whole other thing. But I think there's enough market validation at this point that if you're an allocator, there's a pretty compelling argument that some percentage of your portfolio, it needs to be in digital assets. 50 bips, that's fine, but you need to have a product that allows you to do that in an intelligent way, and that's what we're trying to deliver.
And I think you kind of answered this before, but if you can go into it again, how are you allocating between the different coins?
Yeah, sorry, Ayla.
Yeah, maybe I'll do this thing. It's market cap weighted. So that's how we decide how much to allocate to each individual coin. We calculate how much the market cap of that actual coin is currently. And we do that every 30 days. So it's not a discretionary decision on our end how much to allocate to each one. We try to be as mathematical as humanly possible about it.
Thank you very much. Teddy said thank you. You're very welcome. If anybody else has an additional question, please do. So you said it was liquid and that I can get out monthly. So let's say, is that 30 days notice?
Yep, exactly right. 30 days notice. And the other thing for everybody who's on the call right now, for the profit share, that vests quarterly. So even if you invest with the intent of like, hey, I'm planning on keeping it around for a year and a half so I can get that super cool profit share for the lifetime of the fund. And then things change and you need to pull it up, that's fine. You won't get, any of the unvested profit share won't obviously continue to vest, or if you take out half of it will continue to vest, be prorated down. But you absolutely can get that money out at a 30-day notice at the top of the month or the bottom of the month, depending on how you define these things.
Thank you. If anybody else has one, please feel free. And I was going to ask you, because I know, just making sure nobody else is saying a question. I know there were some pretty hefty regulations in New York. And oh, wait a minute, I'll go back to that. What limits, if any, will be applied to your lending activities, and what lending platforms do you intend to leverage for this? Pun intended. Will staking factor into your strategy?
Tim knows a thing or two about crypto, which is pretty cool. So to answer your question, conservative on the lending is the name of the game. Our initial, we do have kind of risk policies that we've started with, and that might change, but currently it's at a 33% loan to value. So if there's $1 million in there, we wouldn't lend out more than about 300,000. Underwriting the individual pools. By the way, we're not doing this because we haven't found something that we're comfortable with yet. Underwriting individual pools is a whole thing. We would obviously want to have an over collateralized pool with a very clean and efficient clawback mechanism in case the collateral levels were breached on the downside, so that we can make sure we are made whole. There's one custodian that we're actually onboarding as we speak that is of the opinion that they can offer that. But again, even if we go that route, we would very much do it pretty safe, because the last thing you want to do is lose principal for unenforced error. Staking, good question. Absolutely, it is on the roadmap. There are zero, and trust me, one of our funds is a DeFi fund that we launched about a couple weeks ago, actually. But there are zero qualified custodians that will allow you to stake into a reasonable pool. You can maybe get one or two that'll put into Uniswap, but where the stablecoin yields are right now, it's almost not worth doing. You'd rather do the lending. Now, as that market expands, we would expect to go that route, and we would put together some, again, conservative being the name of the game, risk policies around how and where we'd be able to stake.
Thank you. And Tim, if you have a follow-up question, please feel free. But I wanted to jump back really quick to regulations, because the regulations are different in different states, and there really hasn't been a great deal of federal regulation yet. So how are you dealing with that for this fund?
We are a private Reg D fund. We started simple. We can always make it more complex. We're a limited partnership as well. The reason we did that is that means that we can really invest where we'd like to invest, as long as we restrict it to accredited investors, make sure everything's clear there. So we struggle to see a scenario where the SEC is going to come out and say, like, yes, this product you have to cease and desist immediately. Now, the longer term implication or question is what this fund becomes. And we talked briefly about that phase 3. Ideally, we turn it into an ETF, because in an index fund where we are right now, it's not very efficient from a tax perspective. You got to trade, creates capital gains or capital losses. If you become an ETF, you don't have that problem anymore. It's a more deep liquidity profile for a secondary, so you can actually do trades. You can allow retail investors. Certainly, that's the preferred way to go, but the SEC has not authorized that. Even if the SEC wanted to, going back to the qualified custodian issue, this product wouldn't be able to do it today, because there's not enough symbol coverage from qualified custodians in the market right now to do the full 30. So even if we wanted to become an ETF, we really couldn't and do the top 30 today. Now that's changing fast. At 21 or so constituents we have on qualified custodians, I think 3-4 months ago it was like 14.
16. Yeah, exactly. It was 14 or 16. And that's moving fairly quickly. Another thing to think about is that, and the reason why it's going to start moving more quickly as time goes by, but these custodians also are having one hell of a time keeping up. We see about a 20% or so turnover in these constituents on a month-on-month basis. So imagine Coinbase having to onboard a large percentage of new coins on a monthly basis. So it's quite the effort on their end as well. There are some states that don't actually allow them to add another asset unless the state has signed off on it, which is, kind of a hamper. One custodian has this problem is Anchorage, which we chose not to go with. But yeah, we see that being more and more solved than not solved over the next 2 to 6 months.
And one last thought on that, Ayla, because you brought up, there's different, to become a qualified custodian, the easiest way to do it is to become a chartered bank, so get a trust license. Mm-hmm. There's 2 different layers. Each state has trust licenses that they can issue, and then there's federal trust licenses. Most qualified custodians are at the state level. Anchorage, Ayla is one she mentioned there. As a federal license, it's about the only one that does. We would like to get to the point where we have federal chartered trusts across the board, again, just from a regulatory diligence point of view for more institutional allocators when we get to that phase 2.
So I just wanted to have you go through the ask again. so that everybody could hear it, because a few people did jump on late today.
Okay, sounds good. So here you go. Let's give everybody epilepsy again. All right. There we go. So here's the investment terms. So the minimum investment is 250,000. We will be increasing that when we get to 5 million in AUM. We're about 1 right now. Again, we just started our marketing outreach, hence this call. It's 2% per annum, 20% on the rev share for the lending. There's no performance fee in the traditional sense of, hey, if that thing appreciates, 20% of it's going out the door. We don't do that. We cover the OpEx. It's a monthly redemption. It's investable now. We actually have closes on the first day of every month. So if that's of interest, definitely come out. And when you do make an investment, we'll also do the profit share agreement at the same time in proportion to how much the investment is.
Thank you very much. Anybody else? Because I'll just keep going. No, this is really interesting, because usually you don't get so many direct answers on regulation and how you're doing it and everything else. So I really appreciate that. Is there anything else that anybody would like to add? No? Okay. Now you said phase 2 is going to start in September.
Phase 2 will start when we hit 10 million AUM.
Okay.
That's when we start going out to broker dealers. That we'll see. Where we got, like I said, we just started the outreach. We got about, August. I would guess Q4 would be when phase 2 starts.
Fantastic. Well, I can't thank you both enough, especially with the mini me, Kenny. I want to know how to do that at some point in my life, because that is amazing. I just want to thank you both. If anybody wants to follow up, I believe that Arthur will be sending out an email so that you can contact Diffuse. And if you want to right now, you're welcome to send a message to all panelists with your number if you want them to reach out to you. And they can provide you with a different, with the materials. And if not, that will come in a follow-up email. Thank you both. I really think it's fascinating. And I think it's a long time coming that this was done, because I'm one of those people, I'm like, oh, Bitcoin, Ether, I don't know what I'm doing. I don't even know how to do this thing with Coinbase. I do now, but and I really was looking for something like this where, kind of idiot-proof investing really, and it wasn't out there for so many years. So kudos to both of you. It's really amazing.
And Wendy, and Wendy, you're our target audience, right? If somebody is like really gung-ho and really understands crypto, our products have less value. Same way, like if you're actively doing stock picking on a day-to-day basis, you're probably not investing a lot in the S&P 500. So it's exactly that. People that get the hype, they think there's something there, they want that exposure.
Don't know how to do it.
Exactly. Yeah.
Well, this is just really been fabulous, and I wish you much success, and for myself, want the materials. It's amazing. So thank you, everybody. Thank you for sharing your afternoon with us, and we'll be following up. All right.
Thank you. See you later.
Everybody. Thank you.
Have a great day, everybody.
All right. Cheers. Bye.